You really beat expectations on earnings per share by a good margin, and you took up your guidance for the rest of the year on earnings per share, but you did fall short on the pre-tax operating profit. How do you reconcile those two?
Well, we did have a solid adjusted pre-tax profit, as you mentioned, but what's behind all the numbers in terms of the net improvement as well as the adjusted EPS is a favorable tax rate. Our tax team here at Ford has done a fantastic job in anticipation of potential corporate tax reform at some point in the future to identify some measures that we can take to recognize some deferred tax assets onto our balance sheet related to foreign tax credits from overseas. And so that gave us a very low tax rate in the quarter, about 10%. It also gave us an outlook for about 15% for the full year. So that's what's behind that.
And what about the total, not the earnings per share, but the total amount of pre-tax operating profit for the year? Have you changed your guidance on that, where you're going to come out for the year?
Well, we've provided a range of guidance in terms of EPS, adjusted EPS of 165 to 185. If you go to the top end of the range, there's a very, very small change in terms of the PBT element of that. And that's really reflecting basically somewhat higher incentives that we see across the regions for the balance of the year, some additional warranty expense in North America, but then offsetting that is stronger results at Ford Credit, who had a tremendous quarter, up 55%.
And talk to us about margins. Where did you come out on margins, and what are particularly squeezing the margins for you right now?
Well, we came out at 5.9% for the automotive segment, and that was down on a year-over-year basis. And the biggest factor behind that has been commodities. We talked about that earlier this year. In the quarter, we had nearly $400 million of headwinds from commodities. We had nearly $600 million or so for the first half. We expect about $1.2 billion for the full year. So that clearly is one of the biggest issues. And then in addition, in the quarter, we had some unfavorable exchange, and that was in Europe related to Brexit, and also in Asia Pacific related to the weakness of the Chinese renminbi. And we had a one-time gain on a sale of an entity last year that's not repeating this year. Those were the three factors that affected the PBT.